Hello students, very good evening to all of you students. So students, today's session would be on transfer pricing. We have done and we have dealt with the entire facet of the provision relating to the entire provision, students, which is relating to the non-resident taxation and equalization levy, isn't it? So this two particular areas has been discussed by us up till now, students. So now we will proceed further in our discussion. And students, now herein, let's look upon to this one by one. Students, just allow me a minute. Now, students, if you all see over here, in the case of transfer pricing provision, always it comes this time. In this attempt, they have targeted the methods determining the ALP. So what are the methods for the determining the ALP? And they have targeted the cost plus method. That is your May 22 attempt. And this was in fact targeted from the study material itself. And in fact, there are two questions which they have introduced newly in the study material, out of which they have targeted one, which was in cost plus method. In fact, I have insisted the students to do this particular topic thoroughly, and they have done this particular question. And once they are done with this particular question, thereafter, students, in the marathon lecture also, we did adjust day before examination same question, and the reason was very clear. It was newly introduced in the study material. So students, transfer pricing is a topic whereby every attempt you will find some particular area or the other being targeted, and that is such a unique topic. And therefore this attempt also, we will do each and every areas of the practical questions thoroughly. Before that, a very quick recap of the provision, students. Let me give you a very quick recap of the provision, and then we start with the chapter itself. Students, let's start with this one. So here, students, the applicability. If you talk about the applicability of the transfer pricing provision, I'm just taking that particular point first. So let me take you through towards the applicability of the transfer pricing provision. Applicability of the transfer pricing provision, students. Now here, when you talk about, students, the applicability part, now there are sections like 92.1 main section. Thereafter you have 92.2, and the last one, students, is about the specified domestic transaction. 92.1 and 92.2. First of all, I'll take you through to 92.1. Specified domestic transaction, students, we will do it towards the end of this particular concept. We'll then do the 92.1, the specified domestic transaction. But before that, let's look upon to section 92.1. So what it says that income, expenditure, loss or allowances arising from an international transaction shall be determined having regard to the arm's length price. So income, expenditure, loss or allowance arising from an international transaction, students, shall be determined having regard to the arm's length price. So ultimately, students, the entire focus is on what? It is on the international transaction. If you see, ultimately here the entire focus is on the international transaction, and this international transaction itself take you through towards the entire topic of the transfer pricing provision. So the entire topic of the transfer pricing provision is determined on the basis of this particular phrase of which phrase, students? International transaction. On the basis of this phrase of, students, international transaction. So now, students, if you see over here, let's look upon and let's break it down to this one. International transaction. And that is, students, section 92B. Now, first of all, there has to be a transaction, and the transaction should be between whom? Between whom the transaction should be, and transaction should be in respect of what? So between whom this particular transaction should be, and the transaction should be in respect of what? So the transaction should be between two or more associated enterprise, and this associated enterprise, students, definition is given in section 92A. The transaction should be between two or more associated enterprise, students. And as it goes over here, the associated enterprise definition, students, is given to you under section 92A. So that is how the things are given it over here. So in this context, students, if you all will figure it out over here carefully, so between two or more A, that is section 92A. Now 92A, students, we will discuss it as and when the question will arise. I'm not going to do it right now. 92A, as far as the definition of associated enterprise is concerned, broadly they have given you into three particular category, and the three part category is the capital based relationship, second is the control based, and the last one, students, is the management based. So capital, control and management. So we have over here the three particular parameters on the basis of which we decide whether or not this particular enterprise could be considered to be an associated enterprise or not. So therefore, friends, it's 92A. Always keep in mind. Okay, I'm not highlighting upon right now. As I told you, as and when we do the questions and they talk about anything about the associated enterprises, at that point of time we'll try to go back to the definition of the associated enterprise. Okay, now the transaction between whom, that is what you are aware of it. Now the transaction should be in respect of what? So the transaction, students, should be in respect of, now there can be anything, students, please pay attention over here. It can be for the supply of goods or services, it can be for the lending or borrowing of the money, it can be that also, it can be purchase or the sale of the properties, or for that matter, students, any transaction that has taken place between the associated enterprise which has, pay attention, students, which has the bearing on the profit and loss account, which has the bearing on the profit and loss account of the Indian A, which has the bearing on the profit and loss account of the Indian A, students. So if you see over here, the transaction should be in respect of what? If you see very carefully over here in this context, I'll just write in a simple word, any transaction. Any transaction which has the bearing either directly or indirectly, on the profit and loss account of the Indian A. So that is what will be considered. This is the kind of a transaction that you need to look upon. That is, again I'm repeating, students, the transaction should be between whom? The transaction, students, should be between two or more A, and the transaction should be in respect of, the transaction, students, should be in respect of, this could be any transaction which has the bearing either directly or indirectly on the profit and loss account of the Indian A, and only then, students, this would be the relevant transaction. And how a transaction can become international, students? A transaction, students, therefore will become international if at least one of the A, if at least one of the A is a non-resident. So if at least one of the A associated enterprise, students, in the transaction is a non-resident, if at least one of the associated enterprise is a non-resident, we can say that yes, this particular transaction, we can say, students, that this particular transaction is an international transaction. Is that clear to all of you? Every one of you are clear to this particular thought or proposition or not? Please tell me, students, quickly. Fine. So the entire focus point, students, as we can say, the applicability of transfer pricing provision requires first and foremost the existence of an international transaction. The existence of what? Of an international transaction. So if there is an international transaction between two or more of the associated enterprise, then and only then the transfer pricing provision would be applicable. And what constitute international transaction? I have already told you. The transaction should be between two or more of the A, and the transaction should be in respect of, here what we have written, any transaction which has the bearing either directly or indirectly on the profit and loss account of the Indian A. On the profit and loss account, students, of the Indian A. So I hope that every one of you are clear with this particular proposition. Fine. So in that case, this is your 92.1. So in this case, if there is an international transaction, students, what the law says? So if there is an international transaction, the income, expenditure and the loss arising from an international transaction shall be determined having regard to the arm's length price. That shall be determined having regard to the arm's length price. Now 92.2, students, is about the cost allocation or apportionment. Cost allocation or apportionment between whom? Between two or more A, between two or more associated enterprise shall also be made. Students, shall also be made having regard to the arm's length price. So the cost allocation or apportion between two or more A shall also be made having regard to the arm's length price. Is that clear to all of you, students? So every one of you are clear with this one. So even this allocation or the apportionment between the two or more associated enterprise shall also be made having regard to the arm's length price. I hope that all of you are clear with this one. Fine, students. Shall I proceed further now, students, in this context? Okay, specified domestic transaction, I have already told you. I'll do it later on. The last point, students, is the non-applicability, and the non-applicability, as you all are aware, the non-applicability is under section 92.3. What is this non-applicability, students? When the transfer pricing provision between the two or more associated enterprise will not be made applicable. So when there would be a non-applicability, so non-applicability is given to you under section 92.3. And what does section 92.3 says? Section 92(3) students in this regard says that if there is a downward adjustment on account of the adoption of the ALP, Now students, as you all are aware, downward adjustment means that if I have adopted the ALP, students, then this has resulted into my total income going on a lower side or my loss increasing further as compared to the loss which I have shown in my tax returns. So if I adopt the ALP, then my loss will increase, or if I adopt the ALP, then whatever is the profit which I have shown in my ROI, that profit gets further reduced, which implies that whatever tax that I may have paid, I may get eligible for refund on adoption of the ALP. Now students, always be careful that the transfer pricing provision which is introduced is actually an anti-tax avoidance measure. This is what the objective of the transfer pricing provision is all about. So therefore, if supposingly there is no avoidance of tax on the part of the SSE, then whether you will proceed further to determine the arm's length price of the transaction, if there is no tax avoidance on the part of the SSE, then will you go ahead and adopt the ALP of the transaction? And the answer is no. You will not do that, because the transfer pricing provision, as it says, will be applicable only when there is a tax avoidance concept. So if there is no tax avoidance that has taken place, the transfer pricing provision also will not apply. I hope that all of you are clear with this one, friends. Every one of you. Fine. So students, let's take a question then. Read, students, the first question, all of you. 446. Question 446, page number is page 495. Page 495. So I hope that students, all of you are through with this one, and that was a simple question, isn't it? Now, but I should tell you, in the examination, students have over here, in this scenario, students, the students have already got into a situation wherein they have completely ignored this particular proposition, meaning thereby this is actually a very specific question, students. This is actually a very, very specific question, which is based on what, students? Which is based on the downward adjustment. But this was the original question way back, earlier times. But now if you see at this present particular moment, they don't do it in this particular way. If you see all the recent kind of questions which are targeted in the examination, in those particular questions, students, what do we find is this, that they have an ability to draft a question in such a smart manner that your mind will not go towards the downward adjustment. And that's the reason why I always keep on reminding the students on one particular point, and that is this, that they will always will have to check at the end of their calculation whether this section 92.3 will be made applicable or not. So this 92.3 will always be considered by the students at the end of their solution. Is that clear to all of you? Don't make a mistake of ignoring this 92.3 outrightly. And one more point, students, as a matter of policy, always keep in mind this. Whenever a transfer pricing question in the examination, students, when you have to solve, keep this particular point in mind. Do make a profit and loss account of the Indian associated enterprise. The Indian AE's P&L, students, always prepare it. And just see the impact of this international transaction. Just see, students, the impact of this international transaction. That is, whether the impact of the international transaction is on the debit side or it is on the credit side. Always, students, visualize the impact of this international transaction and try to find it out, that whether the impact is it on the debit side or the impact is it on the credit side. Is that clear to all of you? This is very important. Always, students, to keep this particular perspective in mind. Impact on debit or impact on credit. Impact on the debit side or the impact on the credit side. Okay, keep that in mind. I will also take you through to the questions, and at that point of time I will also discuss the way the things has to be considered. Shall we proceed further, students? Specified domestic transaction, I told you I'll do it later on. So let's take this thing towards the end. Now let's look upon to certain questions straight away. Students, here primarily this is a question of the determination of the arm's length price through the cup method. But before I do the cup method, let me see the other practical, students. This is also the arithmetic mean. We will do that, but before cup method directly to do it, let's look upon to this one. So this is your module question. Let me take you directly through this particular question. But before that, one more question. I will just want to do one cup method, and then I'll take you to directly through this November 22 attempt, students. All of you mark this to be the most important for November 22. Please mark this to be one of the most important for November 22. This question number 451. As I told you, students, please do mark this to be the most important one. Okay. We will discuss this one. Before that, one question on cup I'll do, and then we'll come back to this. First, cup method. So here is your cup method, students. Let's take the cup method where it is. So the cup method of determination of the ALP. So it is here it is, friends. Question number 461, page 514. 461, page 514. So, DS Limited, an Indian company, supplied raw material to its holding company, SSINC UK, during 2021-2022 at rupees 350 per kg. This is the FOB value, students. DS Limited also supplied the similar raw material, students, to AB Private PLC, another non-resident who is unrelated, at rupees 600 per kg. Now the total insurance and the freight amounts to rupees 150 per kg. The total freight and insurance, students. Now this is in which case, students? The unrelated party transaction. The unrelated party transaction, the total freight and the insurance which has been charged is rupees 150 per kg. Further, DS Limited also provides warranty to AB PLC for 1.5 months, whereas SSINC handles warranty by itself. Both SSINC and DS Limited provides extended warranty at 4,000 per annum. 400 rupees per annum. Now, students, whenever, I think this point, although you may be aware of this particular method, but at least pay attention for the last time, because this is actually the base for my explanation on the other methods also. Just pay attention once, students. So, students, once you have confirmed in the question, that through the data of the question, that yes, this is an international transaction, just figure it out, students. Just taught you, no? Is this an international transaction? So there is a DS Limited, an Indian company, who has supplied the raw material to its holding company. Now is a transaction between associate enterprise. So those who would be aware, there is a capital based control of minimum 26% of the voting power in the other company. So if one company is having a voting power in the another company of 26% or above, then both these companies, can that be considered to be an associate enterprise? Then both these companies, can that be considered as an associated enterprise? To that the answer is yes, students. Both these companies definitely can be considered as an associated enterprise, students. As an associated enterprise. So that is what we can speak about it, about these two companies, isn't it? So that is the scenario which has been there. Now let's look upon to this further. So here what we will say, that yes, they are the associate enterprise because they are holding a subsidiary relationship. Now the next thing that they have told you is that is this an international transaction? Does the transaction has the bearing in the profit and loss account of the Indian AE, which is DS Limited? Does it have the bearing on the profit and loss account of the Indian AE, which is DS Limited? To that the answer is yes. And if you can see over here, students, that what they have done, they have supplied the raw material. So students, supplied the raw material would mean they have sold the raw material. So it's a case of a sale. So sale made by the Indian AE to its foreign counterpart. The sale which has been made by the Indian AE to its foreign counterpart, that is what we have got it from here. Do you all agree to this one? Do you all got this one, students? So this is one thing which has been there. So just have a look over here. Students, therefore, we can say, so this is a transaction. Is a transaction an international transaction? Yes. Why? Because it's an SSINC.UK. So one of the party to the transaction is a non-resident. One of the party to the transaction, is it a non-resident? And the answer is yes. So all the criteria of international transaction is satisfied, and therefore do you have to determine the ALP? And the answer is yes. You will have to then determine the ALP as per section 92(1). And now the ALP is to be determined as per which method? Which method seems to be the most appropriate method? Looking into this question, students, which method seems to be the most appropriate method looking into the question? It is a cup method. Now, if you all look into this cup method, students, please have a look in this regard. All of you should just go through this one once quickly. Just a second. Fine, friends. Now, if you all see over here, so in this case, what is the steps which is involved in the cup method, students? So the step which is involved in the cup method is that, first of all, students, as the name suggests, comparable uncontrolled transaction method, which therefore implies that the first and the foremost thing is that to determine the ALP, you have to, as per this method, you have to pick up the price which is charged in the comparable uncontrolled price method. So whatever is the price, students, which has been charged in the comparable uncontrolled price method, that is the price that you need to pick it up. That is the price, students, that you need to pick it up. That's the first and the foremost thing that you need to do. Okay. So therefore, if you all see over here very carefully, what exactly we all get it? So DS Limited, what is the price of the comparable? He also supplied the similar raw material to another non-resident who is unrelated entity. At the price of rupees 600 per kg. At a price of rupees 600 per kg. So in that particular context, students, at a price of rupees 600 per kg, this is what you can find it over here. Now the question to all of you is the question, students, to all of you therefore is sorry, we pick up the price of 600 per kg. We pick up the price of 600 per kg. So they have picked up the price of 600 per kg primarily. Now once you pick up the price of the per kg in this context, thereafter, students, you have to do the adjustment in relation to, what is the next step? The next step, students, is to do the adjustment in relation to what? The uncommon factors between the two transactions. So whatever is the uncommon factor between the two transactions, in respect of those uncommon factor, that the adjustment needs to be done. In respect of those uncommon factors, students, the adjustment needs to be done. So let's have a look to sorry. So students, in this case, the adjustment that needs to be done in respect of the uncommon factor. Now please tell me which is uncommon factor. The first one, CF. In the case of the uncontrolled transaction, the price which has been charged is inclusive of insurance and freight. The price is inclusive of insurance and freight. What is therefore we need to do? In respect of the insurance and freight, what is that, students, we need to do? We will have to remove the insurance and freight. We will have to remove the insurance and freight in this regard. And why is it that we have to remove the insurance and freight in this regard? So as to bring the price at the FOB level. So as to bring the price at the FOB level. That is the reason why we need to remove. That is the reason why, students, we need to remove for insurance and freight as well. Is that clear to all of you, students? That is the reason why. So you need to do the adjustment. Students, you will need to do the adjustment so as to ensure that the uncontrolled transaction the price charged in the uncontrolled transaction, please ensure to align that price with the factors. Align which price? The price of the uncontrolled transaction. That price needs to be aligned. That price needs to be aligned with the factors which are there. Factors which are there in the international transaction. So if the international transaction is at FOB, if the international transaction, students, is at the FOB, then in that particular case, students, even the comparable transaction also should be at FOB. Even the comparable transaction, students, should also be at FOB. So you need to align the comparable transaction, the price charged in the comparable transaction, with the factors which are there in the international transaction. Clear, students? So what I'm going to do, this is at CIF, bring it to FOB, bring it to FOB. So minus 150, so that now this has been made at FOB price. After that, students, further, DS Limited also provides warranty to ABC PLC for 1.5 months, whereas SS INC dot handles warranty by itself. SS INC dot handles warranty by itself. So here, students, then so the price which is charged to the unrelated party transaction, the price, students, which has been charged to the unrelated party transaction, this price, students, this price is which price, students? Now please tell me. Come warranty. Who is unrelated, by the way, students? AB PLC. So the price which is charged to AB PLC, being the unrelated party, is including of warranty. Do you all agree? Whereas the Indian AE charging the price to SS INC dot, students, that is exclusive of warranty. So one is inclusive and the other is exclusive. So therefore, students, you tell me now what I need to do. I need to remove the warranty then, because as I told you, you need to align to the factors. You all need to, students, align to the factors which are there in the international transaction. So if the international transaction is at X warranty, then even this price should be brought to the X warranty level. Even this price should be brought at the X warranty level. So what I'm going to do, students, minus the warranty factor. 1.5 months extended warranty. So students, this is per annum. This is per annum. So what would be for 1.5 months? So I think the proportion has to be taken. Okay. So therefore, this becomes X warranty. By reducing this, so students, it is 400 now. It is 400 now. Now, what is the price which Indian AE has charged? By the way, it's profit and loss account. Huh? I already told you, prepare the profit and loss account of the Indian AE. Indian AE is DS Limited. Indian AE is DS Limited. So they are supplying. So the international transaction is at 350, which is a selling price. So selling price is on the lower side. This selling price, students, is on the lower side. At what price this should have been sold? At what price, students, this should have been sold? So they are very clearly and categorically telling you it should have been sold. Students, it should have been sold at what price level? 400. Meaning thereby the transfer pricing adjustment will be required. Yes. How much? 50 rupees per unit. 50 rupees per unit. So it's 50 rupees per unit, students, for which your transfer pricing, this particular adjustment would be required. Fine, because I have charged lower as compared to what is my ALP, which is at 400. So this is your cup method, students. The cup method. One more cup method, students, we'll see, and then I'll take you to the resale price method. Persistent cough, students. Please have a look to question 462. SINC.UK holds 30% of capital of DS. How much is the percentage that is required to become an AE? At what particular percentage, students, you become an AE? 26. Isn't it? So that is a 26%. So if you see over here what it says, SSINC.UK holds 30% of capital of DS Limited, an Indian company. DS Limited has declared income of rupees 150 lakhs for previous year 21-22 before making any following transfer pricing adjustment. Fine. Let's see. Point number 1. So first of all, they are AE students, UK and India. How much is the return income? 150 lakhs by the Indian AE. The Indian AE has shown the income as per the ROI, which is 150 lakhs. Now let's have a look to point number 1. Royalty of US dollar 12 lakhs was paid to SSINC. For use of technical know-how. So students, here you are paying to your UK. So the profit and loss account, debit, how much is the amount? 12 lakhs. So royalty of US dollar 12 lakhs was paid to SSINC dot for use of a technical law. Thereafter, SSINC dot had provided similar know-how to another Indian company at US dollar 9 lakhs. So it means there is an excess debit in the international transaction. There is an excess debit, students, and by virtue of the excess debit, my profit, the declared profit, is reduced, isn't it? So I need to add back 3 lakhs so as to bring the profit, so as to bring the income at the ALP level. So as to bring the income at the ALP level. All of you agree to this one? So the income at the ALP level would be 153 lakhs after first adjustment. Let's have a look to the second one, friends. Loan of US dollar 500 lakhs carrying at 15% per annum was advanced by Korean company XYZ INC dot. Total book value of asset of DS Limited is rupees 900 lakhs. PP Limited has advanced similar loans to another entity at 12% per annum. Okay. And total interest paid for the year was US dollar 75 lakhs. So compute the adjusted total income of DS Limited for previous year 21-22. Assume 1 USD equal to rupees 63. 1 USD equal to rupees 63. Now students, here if you see it very carefully in this regard, please have a look. So the loan of US dollar 500 lakhs carrying interest at 15% per annum was advanced by the Korean company XY INC dot. Fine. Total book value of the asset is 900. How much is the percentage of loan to the asset? Book value of the asset? Is it more than 50%? Why I am saying so? Because you people are aware, if the loan which I have given, if it exceed the total book value of the associated enterprise by more than 50%, then both these entities will become the associate enterprise. Both these entities will become the associate enterprise. And this is what you are getting it, friends. Are they the associate enterprise? And the answer is yes. The loan amount advanced is more than 50% of the total book value asset of the Indian AE. And therefore, both of them are associate enterprise. Is that clear to all of you students? And that exactly is the point. I hope that all of you are clear with this one, not students. Okay. Shall we proceed now, students? Okay, Ajit, I think tomorrow we'll just do it. Suddenly, there's a, I don't know, like persistent coughing is there. Tomorrow we'll meet up, students. Okay. Tomorrow, students will directly now. I have completed, students, today. I'm just checking for any homework question. Yeah. Ajit, I'll ask them. So any homework question, students, just let me see, and then we'll close the session today. Tomorrow, students, I'll do that resale price method. That question is there. Students, tomorrow 11 o'clock we'll meet up. 11 p.m. at night. 11:15 p.m. and 2.5 hours tomorrow. So tomorrow we are stretching up a bit. Okay, so 11 o'clock we'll be meeting up tomorrow. Only for tomorrow, Ajita, one, because 8 o'clock there are some guests which are coming, and I don't want to cancel it because I had promised to all of you that by 31st I will complete your transfer pricing. So only for tomorrow I'll stretch it up. Okay, so this is the question, I suppose. No. I think that is it. There's nothing. Okay, friends, let's close the session. I'll just make the announcement, friends, last and one announcement of our price hike, which you can just communicate to your friends, students, quickly. So here, students, is the price hike announcement which is there. Please do let your friends know about it. So here, Unacademy, 15% price hike is going to happen now, students, very soon. What soon? After 31st of May. Only 2 days is left, students. Only 2 days is left. So request to all of you to communicate this announcement to all your juniors, to all your friends, and tell them to take up the subscription ASAP. This price hike, students, is for CA Final, for the Plus as well as for the Iconic, both. Plus as well as for the Iconic. Okay, and they have still a chance that on the existing rate they can get a 10% discount, which they can get it by using the code CADS. The code is, students, CADS. Is that clear to all of you, students? Please do let them know about it and tell them to take the advantage. Students, I'll see you then. Do take care. Good night to all of you. See you then tomorrow. Bye-bye.